Thank you, everyone, for joining us today. Good afternoon. We want to thank you for joining us, for taking the time to learn more about SheBoot. My name is Miriam Zahouri. I'm the Content and Engagement Specialist here at Invest Ottawa. We're delighted you chose to join us today for a very important conversation with SheBoot leaders, mentors, and investors, Jennifer Francis and Julia Elvidge. Each of these leaders brings a wealth of experience from the corporate and tech world, experiences that inspired them to consistently champion and create space and empower more women to succeed. Their CVs are a little too long for me to cover in a quick intro, so forgive me, ladies. So I'm going to jump into the highlights. Jennifer Francis is the chair of the Capital Angel Network, the principal of Cafe Noir Consulting, and the regional ambassador for Technovation. Julia Elvidge is a member of the board at Cybernet IQ, an advisor at Invest Ottawa, and an activator at SheEO. Now, I'm going to let Jennifer and Julia take the mic to share their stories with you, including the experiences that drove them to help launch SheBoot and how this program can help you take your business to new heights. Jennifer and Julia, you have the floor.
Thank you.
Thanks.
Jennifer, do you want to get started with just letting people know what SheBoot is about before we dive into how we got here?
Yeah, sure. I can talk a little bit about SheBoot. So SheBoot is a boot camp that we've designed between Invest Ottawa and Capital Angel Network. The boot camp is a 4-week boot camp for female entrepreneurs. And the intent of that 4-week boot camp is to get people investment ready so that we can get more investment into the hands of women entrepreneurs in Ottawa and the region.
And I really am excited by it because it's a group of women, investors, advisors, specialists in their knowledge area, getting together and saying, hey, let's make something different here and support the next generation of women-led businesses. And I think that's what I'm most excited about is that it's a real women for women program. And original in this area and very new to Canada as well too.
Yeah, and I think that's been one of the great things about the program. When we first discussed this idea, when was that? December?
Well, I think the first sit down was February, I think, yeah. But that's when we got the whole group together.
Yeah, when we got the whole group together. But when you and I first discussed it, I think it was December or January when we first discussed it. And then we rallied together a group of women and got unbelievable support within the community for the idea, both from an investment perspective. Lots of female angels jumped into this as an opportunity to give back and promote women, as well as women who work in the areas of legal and finance and marketing to put their expertise together to help the entrepreneurs in the city.
And I do have to, before we go much further, the first person we dragged into this was Sonia Shorey, because we knew that she would grab it by the horns and run with it, and she has. And so thank you, Sonia, for all of your hard work moving it to this stage as well too. But on top of that, the support from Capital Angel Network and Invest Ottawa has been incredible, and I'm really happy to see that as well too.
Yeah, I think the collaboration between the two organizations has been fabulous. Right, it gives us the investment side and the Angel Network with Capital Angel Network, and then the program management and the marketing and the energy of Invest Ottawa. I think it's been a great collaboration over the last few months. Yeah.
And just to let people know what the criteria is, we're looking to support women-led businesses that have at least 33% ownership. The women have at least 33% ownership and are driving force within the company. And when we say that, we mean CEO, CTO, COO level of individual that really are part of the visionary process as well, and are pitching for the company going forward. Those are the type of individuals. If you're not sure whether you hit all that criteria, just send me an email. I'm Jennifer an email, and we'll be happy to chat with it. Okay. So Jennifer,
There you go.
tell me how you got to here. We were both women that sort of lived through the tech industry for a few decades. We won't count how many exactly, but and you and I actually didn't interact that much until really within the last 5 years.
Yeah.
What brought you to today, and what drove you to this point?
So I think a number of different things. Yeah, a few decades in the tech industry. I'm a computer science grad from the University of Waterloo. Went from there into the software industry, and I've worked I haven't been a founder myself, but I've worked for a company that had 20 people up to IBM with 400,000 people worldwide. So a variety of sizes of companies and experience. And throughout my career, I kept thinking that more women would join in. It's been a great career for me. I really enjoyed it. And I kept thinking as I went through, we'd start to see more women join in and take advantage of these awesome opportunities. But it actually went the other way. So during the course of my career, the number of women pursuing computer science and technology actually declined in universities, and therefore the intake into tech companies started to drop as well. And so throughout my career, and probably the same with you, Julia, a lot of times where I was the only woman in the room. Mm-hmm. When I left full-time work and started doing more angel investing and advisory work, I found in the angel investing world, it was not 100% male, but vast majority male. And there were definitely a number of times when I'd be in a meeting and I'd be the only woman, and most of the companies that pitched were male companies. And then you look at, is Ottawa different from other places? And well, no, not really. I think for all female teams, so female CEO, founder teams, I think it's something like 2% of funding goes to all female teams. Something like 13% of funding goes to teams with female founders. So the majority of the funding is still going to male founders, male teams, and primarily male investors. And I really feel that we're missing a lot as a country, as a community, by not bringing in everybody with ideas. And so a lot of the initiatives that I've done since I left full-time work have been around trying to get more access for women who want to work in the tech field, and in this initiative, particularly women with ideas, founders, leaders within companies. What about you, Julia? What brought you here?
Well, similar. I come out of the tech world, electrical engineering and semiconductors. I was here in Ottawa. I came to Ottawa because of the boom in Silicon Valley, and Ottawa was good to me. It was a great place to grow my career, but also bring up my kids. And I liked the combination of being 15 minutes away from them at any point here in Ottawa versus an hour and a half in Toronto. But I was able to try some different things, and became co-founder to ChipWorks 20 some years ago, and helped grow essentially a global company in the IP industry for 20 some years. It was really interesting, and I actually learned in the process that because I was president, I was actually influencing the type of people that got hired, even though I wasn't directly hiring them in the end. Because it was only when I left that I went, oh, really? Is this what the real world's like? Like that wasn't a team player kind of move. Like, really, why would you not be a team player? And it was suddenly hit me. I hadn't actually spent enough time helping enough women. I had all my energy, and I think this is frequent for many women, all your energy gets focused on work, family, and maybe you, right? Trying to extend a hand to the next generation, trying to take time to do that. It was tough. And so since I moved into semi-retirement and started helping out Invest Ottawa and getting involved with female founders, doing a lot more just general mentoring, and then finally angel investing, it's been really good to give back. And looking for more ways to more effectively give back has been one of my motivations, and why we got onto this idea of SheBoot, and it seemed to be the right way to go. And you have been my mentor from an angel investing standpoint, because I'm still a newbie in the angel investing world, and I haven't taken my hard knocks yet. I'm still figuring it out, but I'm really happy that I've been able to support some women-led businesses so far.
Yeah, I've been angel investing for I think 6 years now.
Mm-hmm.
I think 6 years ago I did my first angel investment. My first one actually made money. Just not so bad. Some of my other ones haven't, but yeah. And during that time, it took a little while, but a little over a third of my portfolio is now female founders. Yeah, which is good. So that took a little while, just because it took us a while to start getting female founders to come out to the meetings and start pitching. The view of Capital Angel Network had been probably not totally unfairly, fairly male. So it's taken a little while to change that. We now have, I think, 11 female angels within Capital Angel Network, up from 2 when I joined. So a lot of progress there, and that makes it easier. It's easier, I think, for women to pitch when there's more women in the room. So we're seeing more opportunities now, and hopefully with SheBoot, we'll see a lot more after that. Get more of these, more women willing to pitch to angels, and start taking in more investment so they can grow faster. And I think that's also a good way from, if you look at executive suites, one way of getting more women into the executive suite is to have more women building successful companies themselves.
Mm-hmm. And I think that's been my real push here too, is, we both, Jennifer and I, talked about how, trying to change the corporate world and women's involvement in tech companies, which has been about 25, 27% in Canada, and it's just flat. It doesn't change. For at least a decade, it has not changed significandbearing And part of that is that there is some more women going in, but there's women coming out, particularly in those early childbearing years, and not necessarily making it back in again, for whatever reason that may be. But I love this idea because it really meant starting again. If I put my effort into helping the next round of companies become more female-led, then that's going to eventually fix the problem. Like, something has to change in this world of women in tech, and this seems to be a different idea, similar to the SheEO kind of idea, but this one is more tech-focused, tech-enabled businesses that we're hoping are scalable and will grow and flourish here in Ottawa and Canada and beyond.
Yeah, and the next Shopify for Canada will be female founded.
Yes, yeah. And it's nice to see that we, some of the early program champions are actually from Shopify as well too. I think they see the benefit in that as well too, going forward. So you come from a background and you've been involved in, we were talking about the different age groups that you've been supporting, in particular Technovation program. You've really tried to touch on different areas of supporting women. Is there a preference?
Is there a preference? I think there's lots of areas that you can work. I mean, when you look at women in technology, there's a funnel problem in terms of how many women are coming into the field, particularly from the tech side. When you said 25 to 27% of technology companies of employees in technology companies are female, a high percentage of those women are not in the core tech part of the company. So technology roles in tech companies, it's under 20% in Canada. And, part of that is the pipeline, right? We need to get more women in. And you mentioned, Julia, that women leave in the childbearing years, and that's true. They don't actually leave work. If you look at the Canadian workforce, we've got a high percentage of working mothers, right? So they're not leaving the workforce, they're just leaving tech. And why are they leaving tech? They're leaving tech because of the culture of a lot of tech companies. Part of the issue with the culture is, you're always in the minority.
Yeah.
And, so you're always the minority position saying, hey, I can't have that meeting at 6 o'clock. I've got to go home and get the kids. Things like that.
Flexibility being so important, really.
Yeah. And so, part of what we need to work on is getting more women into the funnel, taking the technology degrees and going into those roles in tech companies. So that's Technovation is, for girls in middle and high school to teach them technology entrepreneurship, and 56% go on to study more computer science, computer engineering, software engineering afterwards, which is phenomenal.
Yeah, incredible program.
Yeah, so getting more in that way. And then women powering technology, we do a lot of networking events. And Julia, that's where we met, was when we had you do a panel about 4 or 5 years ago.
Yeah. Okay.
And that's helping women build up their networks so that even if you don't have a lot of women within your company, that you can build up a network of women who work in the field, which we know helps with retention. And to break that 27% number, we have to get more women coming in, but we also have to keep them in the field. Right?
One of the things I'm really loving about Women Powering Technology is it's multi-generational. Now, I bring my daughter, other people bring their daughters. My son showed up once too, but that's shocking. It's nice to have that now. It really is a nice mix of showing up. But,
and then so that, and then from a angel investing and supporting female founders is getting more women in the C-suite by having you start in the C-suite, and build your company around that. And that, I think it's harder to shift large companies, but if we can get more women starting companies. And lots of women start companies, but giving them the opportunity with investment to scale and grow those companies, and start to be a force to be reckoned with as we help these companies get bigger and stronger.
I think that's what brought me to the angel investment area too, was since I was semi-retired, it was a nice way to stay in touch with tech, it was a great way to give back from an advisory standpoint as well. My work with Invest Ottawa as an early stage advisor, I have so much fun doing that. It's really interesting to see the ideas people bring and see if I can help them, find the fastest way or the easiest way, because there's so many challenges for entrepreneurs, and if they can have a bit of a help along the way, it really makes a difference.
Yeah, and I think it's a good way to give back. As I said, I've worked in many different sizes of companies, but I've also worked in many different roles. So I started as a software developer, but I've worked in product management. I spent several years in marketing. I've done business development, partnerships, mergers and acquisitions, executive roles. And so I can draw on that and help founders from a variety of different perspectives because of the things I've done in my career. So I think it's a good way to give back that way.
Yeah. Well, and I think the we talked about the Technovation, the young, but the not necessarily old but older group is the Women Get on Boards, right? Getting more women into the board of directors of tech firms is a real push for me to see and figure out what those barriers are. And it's still, you know, we've made breakthroughs, and if you look at the numbers, generally there's more women getting on boards, but it's still, you know, numbers like 1 in 6, not much higher than that. And tech is not 1 in 6 at all. I don't know what exactly the number is, but it's probably close to 1 in 100. But in Canada, anyway,
might be 2 in 100.
But you know, some places are like California, you know, where tech companies really, the majority of them have made the decision that, you know, that's it, folks. You know, you have to have women on boards, and it's not an if or may anymore. This has to happen, and it, you know, nobody really wants that to happen, but sometimes you just need to burst the valve and get to the stage where, like you said, there's more than one woman at the table, and there's a certain comfort when there's more than one woman at the table, having the conversations and having the tough conversations that need to be had to move not only the company forward, but also women forward in tech.
Yeah, and I mean, women are 51% of the population. And it just seems short-sighted that we're not taking full advantage of the creative and intellectual power that women bring to the table. And we know that diversity on boards and management teams breeds more financial success. We know that female founders, female leaders of companies, have more financial success than males, and yet. You know, there's still a lot of things stacked against women in terms of getting investment, getting on executive teams, getting on boards, even though the data would suggest that it's better for companies to do that. And so I think, you know, again, you know, SheBoot, you know, giving that support, you know, and both from a bootcamp perspective, the knowledge, experience, advisory support, but also financial support, the $100,000 investment. You know, because to grow and scale a company, you need money, right?
Yeah. Well, I'm really proud of that, because I'm getting 10 women to put $10,000 towards this $100,000 prize. I'm really happy to see that. And you know what made me really proud was that when COVID hit, I thought, oh gosh, the world's changed. I can totally understand people backing out at this point, but you know, it was so consistent. Really, I was overjoyed to see most of the women just say, yes, I'm still going for it. And that's a fantastic. You know, it shows how passionate these women are for this particular program.
Yeah, and I was really pleased with that, and the overwhelming desire to go ahead, even if we have to do virtual boot camp, that we want to go ahead, that the 100,000 investment is still there post-COVID. As I don't know if anyone on the Facebook Live has been trying to raise money, but it is a bit harder now than it was a couple months ago.
Yeah.
So to be able to get the full amount reconfirmed.
Was good.
Yeah, that was really good. Because in the end, you know, you can have great ideas, you can work really hard, but you need the funding to be able to grow.
And I do want to point out, right, the goal is not, I mean, that prize is all from women investors. But for that final pitch event, we plan on trying to fill that room with a bunch of different types of investors.
Yeah.
They can be any type, but they could be women or men, or any diversity you want. That's the goal, is for that final pitch, that there's other dollars sitting in that room listening as well.
Absolutely. And the goal of the boot camp, part of it is that $100,000 investment, but the real goal of the boot camp is to put all our expertise together to prepare these founders to be able to raise money from any angel group in the country, as well as to be able to confidently sit in front of VCs. And we know that most of the VC partners are male, particularly in the large VC firms. So building up that confidence to be able to pitch not just to a panel of women, but also a mixed group or an all-male group, and be able to know how to pitch, how to handle the questions, the objections that might come forward in order to successfully raise money and to start tipping that.
Having those tough conversations in a more private sense before they get stuck in front of an audience.
Yeah. So that when you do get in front of that audience, and then you're prepared, you know what to do, how to handle it, and how to ultimately be successful and get the funding to be able to grow.
That's fair. Yeah, that's fair. We should go to audiences. Oh, there's Miriam.
Julia beat me to the punch. You're eager. I like it. So I am back, and I'm going to be sharing with you folks. So first off, thank you for sharing about your experience, what's inspired you to do this, and the positive impact that we can all make together through this boot camp. It's very, very exciting. I can't not smile talking about it. Look at all of us. We're so happy. It's great. And now we're going to jump to some audience questions. So thank you to everyone that's tuning in right now. And thank you to everyone that provided some really great questions before this event. Know that if your question isn't answered here, we are going to do our best to still get it in front of the experts that are joining us for SheBoot. And you'll see an answer popping up in the next couple of weeks. So stay tuned. So the very first question we have is, and I'm going to speak on behalf of the people that have submitted these questions. So I would like to know the recommendations for when to go for advanced levels of VC funding. For people tuning in who might not know, VC is venture capital. And also to learn more about new innovative investment models being led by other women.
All right, well, why don't I start from a VC perspective? So generally, two metrics you should be looking at for when to go for VC funding. One is your revenue level, and the other is your growth. So if you've got typically, so I'm going to say, so it was later stage VC. So this would be like a Series A. Generally, Series A funding, if you're a subscription style business, so monthly recurring revenue of 100K or more is what you should be looking at, with month over month growth on that 100K. If you're more annualized revenue, you should be looking at annual revenue of over $1 million. And again, you want to have a good growth rate to be able to go for a Series A. There are Series A firms that won't really look at a company until they're at the 500K monthly, but most will look at companies at around 100K MRR for a Series A. There are also VCs that do seed funding. So you can be a little below that and get VC seed funding. It'll be a smaller amount of money typically. And again, it would be your growth trajectory and the size of your market. You should be looking at markets that can be billion-dollar markets if you're going to go down the VC route. That doesn't mean you have to be at $1 billion, but your market should have that potential in it. For VC funding. Angel funding is lower than that because angels will fund opportunities that don't necessarily need VC funding. So the opportunity could be smaller. Angels will do what we call base hit funding, so a 3 to 5x return in 3 to 5 years versus a 10x return in that period. So different types of investment theses between angels and VCs. There's a number of different female different models, investment models for females and led by females. And I think Julia could probably speak about SheEO because you're a SheEO activator.
Oh yeah, SheEO is certainly Vicki Saunders, who's an Ottawa woman that has moved on, but she had started this incredible program in Canada first and has expanded it to across many nations now, including US states, different states in the US, as well as I believe the Netherlands, England, and New Zealand. So, it's really an incredible force. It is the women that put $1,000, it's $1,100 now, towards this program. There was 500 in Canada that did it the first year to put together a $500,000 fund, and that has grown year over year. That is actually a loan to these entrepreneurs, and so it does get paid back, and so that the fund just keeps expanding. Typically, it's about $100,000 per individual company, and these companies can be anything, and they are chosen by the activators, the people that put the money in through various stages of evaluating applications and going through that program. It's pretty fabulous, and it's nice to see. It's typically non-tech, so this is a little different, but it's great to see the energy of what they pulled together and continue to grow, and it's nice to see another funding source for women in the industry.
And then there's also funds like Stand Up Ventures Fund. Mars has a female founder fund. So there are 51 in Calgary for female founders. So those are women-led funds that invest from the angel to the seed stage. So there's a number of different ones across Canada in that area.
Including, and then BDC has special women-led funds. It tends to be later stage.
Yeah, BDC is a little later.
Yeah.
And to the folks tuning in, if you have any questions about any of the funds or programs that were mentioned, just send us a direct message and we'll give you some more details. So moving on to question number 2. This one has more to do with boards. So Julia, I'm really glad that you spoke about women on board, and I shared a link in the chat as well for people tuning in. So please check that out if you're interested in joining a board, or maybe you're not, but you should be. So definitely check them out. So we need more women on board. So the next question is when should you introduce a board of directors?
Well, my recommendation is typically start thinking about your board of advisors sooner. The board of directors is a governance body that is really important, probably later stage. But as you pre-revenue, focus on the advisors that some of them may be providing a bit of a halo effect, as in they help your brand, but also providing advice in that particular area. Hopefully they have a good understanding of your customer group or the technology that you're working on. It can be different things that they bring to the equation, different backgrounds, different knowledge that will help you move faster through. And it's really nice to have that good conversation. Wait a little longer for the board of directors. That will come once you start getting more investment, and there needs to be more due diligence, and it is an important phase, but advisors are easier to work with, and it is a very fluid relationship you can have. They don't have as many restrictions and liabilities, so they can speak freely and help you move forward. Do you agree, Jennifer?
Yeah, I think some people wait until they've got VC funding to build a real external board. Arguably, you always have a board of directors. Once you've incorporated your company, you do have to list directors. It's just typically the early directors are the founders of the company. So it's really when you bring in your first external investor and director. I would suggest once you've got third-party financing, so you've gone beyond friends and family, you should be looking at a board. Depending on the amount of financing you raise, your investors may insist on putting in an investor representative on your board. And at that point, you also probably want to be looking at having an external board member, not an investor, but an expert in your area who can help you.
Independent too.
Independent. Yeah. You know, someone who's not a founder, not an investor on the board. At the time that the investors start to tell you that they want to be on your board, you want to have an independent investor in that mix when you start getting your investors on your board. And you want to start doing that because board of directors is really about good governance. And once you've got external money and you're now starting to look at the financials of your company, not just from your own personal perspective, but also from your investors' perspective, adding in that governance layer, I think is very useful. And giving you different perspectives from the board on the governance of your company.
Okay. It's great to have you both break down the implications of a board of directors and advisors as well. So the guidance element that can come into it, the amount of support that can be provided, and at what point to come in. So that was great. Another question that we have, and that does relate directly to the eligibility of our program. And I wrote this in the chat, and I do want to reinforce this. Please do not count yourself out. Women count themselves out too much. If you have questions about eligibility, reach out to us. Don't count yourself out. Don't do it. So on to the question is, what criteria do you use to evaluate whether a business is a tech-enabled startup?
Sure, I'll jump on that. I like to think of it as it's got to go beyond a website, first of all. You know, kind of everybody has a website. It typically is, and when we use the term enabled, it can be, if we think about, let's say, Uber, right? Uber is a taxi service. We had those for years, except Uber enabled a different way of working through technology. So it became a tech-enabled taxi service that incorporated GPS and incorporated chatting and incorporated these types of components that made an everyday you know, operation turn into a tech-enabled business. That's my best example. What do you think?
Yeah, no, Uber never described themselves as a taxi business.
I know. Well, don't tell them that. It's
I think what I would think about is from a tech-enabled perspective, we're really looking for companies that have a scalability component to them. And the tech enabling is, you know, to go to Julia's example, so what Uber built in that platform was an ability to scale. So they could scale quickly to multiple geographic areas that a traditional taxi, if you look at a traditional taxi business, they're generally restricted in terms of geographic area. And so generally a tech-enabled business, you might be in many respects a traditional business. You might be a regular, like a gift card business or a flower business or a pet food business. And from a tech-enabled perspective, are you able to use technology to break geographic barriers? To be able to scale quickly, to reduce the physical restrictions to scale that exist in many businesses. You think about, you know, if I run a traditional tutoring business, the time it takes me to find tutors and scale that tutoring business, you know, I'm very restricted in terms of how quickly I can scale. If I run a tutoring platform, my tutors could be anywhere in the world. My students can be anywhere in the world. I can take that tutoring platform, and I'm running still a tutoring business, but I'm now able to scale much faster than I could if I was a purely services style business. I've used technology to enable the scalability of that business.
Yeah, good example.
There is another question that does relate a lot more to the actual bootcamp itself. And this one doesn't have to do with eligibility, but more about the content that we're going to be offering in the bootcamp. And the question is, what type of workshops will there be in SheBoot?
Yeah, so the aim of SheBoot is to get you investment ready. So the workshops, so it's a 4-week boot camp. It's not a 4-month or a 12-month boot camp. And the objective in that 4 weeks is to take what is a solid business and make it investment ready. So looking at, I'll give some examples of this. I've done a lot of advisory work with companies. So, you know, the financial statements you need to operate your business, to file your taxes, to manage your cash balance, etc., are all great. You need those. When you go for investment, the investors are looking for your 3 to 5 year plan. You know, what your opportunity is, different, you know, what's your optimistic plan, what's your realistic plan. Generally, investors don't actually want to know your realistic plan. They want to know your slightly less optimistic plan.
Yeah.
But yeah, so looking at your investment of your finances, not from a management of the company perspective, but from an investability, from a futures perspective. Similarly, from legal, the legal side that you need to be able to take an investment versus the legal side you need to have a company that's running and operating. Your marketing, not from a operational perspective, but your marketing strategy so that you can pitch it. And then your pitch workshops, you know, how to pitch, how to handle questions, how to handle objections, how to message and position your business for optimum success in fundraising. So that's the nature of the boot camps versus an incubator or an accelerator that would be working on your core business. This is really, as you know, looking at your core business is fine. What we're looking at is how to package it. What are the things that you need to add to be investment ready, to be able to successfully pitch and take in money?
And I think the other thing that I'm gonna that you'll like about it is it'll be a nice combination of not just sitting in a room in a workshop, but really practicing the pitch and working with coaches, working and a lot more one-on-one advisory work that will help hone, and as well as using that peer group that is being developed there to support each other and help each other become better in what they're doing. It's amazing how valuable that peer group is.
Yeah.
I've had the privilege of listening to both of you, not just here and in practicing here, but at other events. And I have noticed how much a sense of community, not just with your peers, but to your point, having leaders that you feel like you can actually connect with, that you can be vulnerable with, is so important, especially for women. So knowing that this boot camp is creating that space for women to get that sense of security, but also have that sense of security to take those risks that a lot of women don't necessarily feel comfortable taking or don't have the space for, because to both of your points, a lot of these boot camps for women or programs for women are made to just say, oh, you have an idea, build this business. Now it's like, no, we can do even more than that. So it's really, really exciting. We're taking it in that direction. We are out of time, but there was one more interesting question I was hoping I could ask both of you. Are you all right if I swoop on in there with one more and then we wrap it up? Amazing. So the final question, very relevant, is what are investors looking for in the COVID-19 era?
I'm going to start with, they're looking for the fact that you can survive through this time, and that you've thought through how your business will survive through this, and that it either can wait long enough till we get through this and then expand, or it's already expanding because it's changed or pivoted enough to grow even faster in this time. Those are a couple of things. Jennifer, do you want to add to that?
Yeah, I would say, I would generally assume that we're going to have a period of uncertainty of 12 to 18 months. And so that any financial plan, any business plan that you might have, that you've acknowledged that uncertainty, and you've got contingency plans for depending on what happens. It wouldn't surprise me from any of this, stuff that's being written right now. We could have a second wave. We will definitely have a recession for a while with the difficulties that companies are having, so that you've taken that into account and you know how you're going to make through that 12 to 18 months. There are businesses that are very well suited to this time. There are healthcare businesses, there are teleworking businesses, or remote working, I guess it's not really tele, but remote working businesses. So there are a number of ideas which are particularly suited to this. And then it's like, okay, so if your business is particularly suited to this, when we come out of this crisis, how do you come, you can capitalize on the crisis and then come out stronger from it. Or your business might not be ideally suited to this time of crisis, but you have a way of getting through. You've got a market that you can go after for the next while. You've made some adaptations to be able to sell and service your customers in this period of uncertainty.
In the meantime, start practicing pitches over Zoom calls. It's a little different. It's not like a
100%. And
yeah, for sure. And I would just add, investing is really a relationship game. And that's partly why when it's all men in the room, that you're more likely to have men get investment, because of that rapport that gets built. So in terms of practicing on Zoom, it's figuring out how to make connections with people that you can't physically meet. And that, we may be allowed to meet in small groups, we may not, but we certainly won't be doing large group activities for a while. So how to network, and how to network, how to make connections, and how to keep connections.
And that may mean spending a little bit of time researching who you're about to talk to, right? So that you can keep that conversation going. That's huge as you go through the investment world, knowing what people like to invest in, for example.
Yeah.
That's great. Thank you both so much for humoring me with the additional question. As always, it goes back to people, even in a lot of the answers through investment, through this program, everything. So we hope that everyone watching enjoyed tuning in. Thank you for carving out the time. Are there any final words? We're going to wrap up here, folks.
Thank you so much for listening today. I'm really excited by this program. Come apply to SheBoot. Come get involved. Love to see this grow and grow and grow.
Yeah, I would echo that. Thank you for listening to us over the last 45 minutes or so. And I hope we get lots and lots of applications. And as Julia said earlier, don't count yourself out. The best way to get into the program is to apply.
Exactly. Words worth repeating. The best way to get in is to apply. Don't count yourself out. We're here for you. All right. Thanks, everyone.
All right.
We'll see you later.
Thanks. Bye.